Welcome back. Let's talk about the stock this morning. It was a weak second quarter for Muthoot Finance. The AUM growth came in at the lowest that we've seen for the company in the last 20 quarters. And on a year-on-year basis, it was also led by some rise in gold prices. Geroge Alexander, who is the MD at Muthoot Finance, now joins in to discuss these earnings. Thanks a lot, Mr. Alexander, for joining in. Just wanted to understand with regards to your AUM growth going forward. It's at a 20-quarter low. So what can you talk about this number going forward? And importantly, is it because you're losing some sort of market share to banks who are also getting aggressive in gold loans?
Yeah, thank you. You're right. In the last quarter, we had lost, our AUM came down by about 1,000 crores. But in this quarter, it has gone up, quarter on quarter, it has gone up by about 500 crores. So we are seeing a small increase in the AUM growth. So that's a good part of it. So we should see this going up in the next two quarters, quarter 3 and quarter 4. We should see AUM going up. Now, your second question was about the competition or banks also. See, now in the last 3-4 quarters, banks have started entering into the gold loan sector in a big way. Certainly, they are also doing gold loan. So please understand that banks have about totally about 60 to 70,000 branches all over India. Muthoot has got only 5,000. But still, if all of them are doing some gold loan, there should definitely be an increase in the gold loan for them. But having said that, the market is also increasing because we haven't lost our AUM. We only the growth momentum is slowed, but then the AUM is still intact. That means certainly that there is still demand for gold loan. And if banks have done well, it is the new customers who are coming there. So the market is widening, and that definitely is good for the industry.
Can you quantify, Mr. Alexander, how much you probably have lost to banks in terms of business in the past 2 quarters?
Man, I don't think there is nothing to say that somebody has lost, because most of these loans are very short term. It is 3 months, average is 4 months. So it is not just somebody who has taken a loan from us. He comes back again also. But new customers, certainly new customers come to us. New customers go to banks also. Probably the number of new customers going to banks would have been higher. It's not that some customers have left us, because these are all small loans, very short-term loans.
Okay, but like you mentioned, the entire space is getting more competitive with the banks. So is there some amount of pressure when it comes to offering customers teaser loan rates? How much are you offering in terms of teaser loan rates as of now in order to probably attract customers? And what is this doing to yields? Can you just explain to us these two metrics for you?
Yeah, I think it is definitely, we are not that teaser rates were there always. Even for decades, we have been offering different rates, differential rates. But we offered very, very low teaser rates in the last year. And that was actually had impacted our yields. That is very, very low teaser rates, below 10%, etc. Now, we have stopped at very low teaser rates. But even now, we have differential pricing based on geography. On many other factors, we have differential pricing, maybe the geography, the amount of the loan, etc. So today also we have, but we don't have the ultra low teaser rates. Because when we did the very ultra low teaser rates is when our yields got impacted. So yields came down. But now that in the last 2 quarters we have not stopped this, those low teaser rate loans have actually gone away from our books, and the new ones are coming. So our yields, which was about 17.3 last quarter, has now inched up to 17.4. And also our net interest margin is also at, net interest margin is now at 11%. These two are decent numbers, and I'm sure going forward, this will slowly be inching forward.
Your numbers going then, you said that these are likely to slowly inch forward, inch higher forward. Quarter on quarter, your AUM growth was 1%. You said that, the growth was coming back, albeit at a slower pace, etc. Can you give us a sense of expected loan growth in this year? And NIMs at the peak were around 16-17 odd percent. Now they're around 11 odd percent. What do you end this year with in terms of both loan growth as well as yields, NIMs?
Yeah, loan growth, we had given a guidance of 10 to 15% or 10%. So I think we should be able to do at least the 10% by the end of this year. That is about the loan growth AUM. But NIMS, I think it was about 14 to 15% was on some peak time. That is only one or 2 years or 1 or 2 quarters we got that. But on a steady state, we were having about 12, 13. Now it is 10 to 11. I think the 10 to 11 can go up a bit, but probably may not reach the highest level of 14, 15, etc. That is only in a special situation a few years back that we got that very high NIMs. Upwards of 10, 11, etc. is, I think, a good NIMs for such company because here our operating costs are high. That is why the higher NIMs are required.
Okay, all right. Mr. Alexander, I wanted to just touch base upon your housing finance subsidiary because your assets under management there were down around 13.5% year on year. Your gross NPA has moved up. I mean, it's marginally lower on a Q1Q basis, but year on year, or rather it's moved up on a Q1Q basis. 4.3% is where it stands. Can you tell us what's taking place in the housing finance subsidiary? Are you seeing pressure in terms of gross NPAs? And similarly with your MFI also, you've seen a worsening in asset quality for the third quarter in a row.
Yeah, about the housing finance company, yes, we had 2,100 crores of assets under management at one time, but during the COVID and after that, we were a little slow in our disbursements. Now the disbursements have started picking up, and we should see it growing slowly in the asset side itself. About about the microfinance. Oh, sorry, I was also talking about the quality of the assets. The NPA ratio was higher. It was because the new NPA recognition norms kicked in last quarter. That is why this time it is a little high. But I think it is under control because we have a very good loan coverage provision also.
So what kind of NPA will you do going forward in this business?
So in this, probably in the gross NPA should come down from whatever it is, about 4 to maybe 2.5 to 3 by the end of the next 2 quarters. That's what we expect the net NPA, gross NPA to be in the housing finance sector. And please understand, this is not the usual housing finance. This is the affordable housing finance, where the quality of all the things are much lower than whether the asset, the borrower, etc. Definitely lower than the best of best housing finance. As far as the microfinance is concerned, I think compared to other similar companies, our PAR ratio and also the NPA is far better than many others from the industry. I think we are on track there. It is doing well. Disbursements are so nice. The backlog of the what should I say, the NPAs which were there during the COVID time, it is all behind us now. There are very little more write-offs to be done. So I think that is going places.
Right, we take that point. Thanks a lot for joining in, Mr. Muthoot. As far as the business is concerned, the outlook that you're giving is that things are looking better from where they are right now. But it'll be difficult to be you at a situation where, there is a fair amount of competition coming in from banks in your core business. And at the same time, you are diversifying in businesses which have other financiers who are a lot more, efficient or at a much better place of strength as well. So it'll be interesting to see how things pan out. Wish you good luck for the same as well. On the other side of the short break that we're going to take right now, we will have the management of Akzo Nobel, the makers of the paint brand Dulux, on the other side.